Good day, everyone. The CBDC broadcast will start in 2 minutes to allow for the audience to join in. In the meantime, welcome to the 7th session of FNA's CBDC broadcast. We're happy you are joining us today. I'm Carlos Leon, and I'm your host in this series of CBDC broadcasts. In the meantime, about the housekeeping, the CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDC today. Please remember, you can use the Q&A widget below to ask questions. Speakers will aim to answer as many as they can during the 10-minute Q&A part at the end of the broadcast. Please do not forget Chatham rules apply. Okay, let's start. It's 2 minutes past the hour. So first, some words about FNA. FNA is a leader in advanced network analytics and simulation. FNA software is used to uncover hidden connections and anomalies in large, complex datasets, to predict the impact of stress events, and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Today, as you know, in this CBDC broadcast, what we will have is motivations and challenges, but from a perspective from Asia Pacific. About FNA's CBDC simulation solution, we want to tell you a little bit about it. Our solution enables users to rapidly test, model, and simulate the economic and financial stability implications of introducing a CBDC or other forms of retail digital currencies. The benefits for the users are that they will be able to test different design choices to understand CBDC adoption outcomes related to disintermediation, financial inclusion, payment behavior. They will be able to simulate shocks and stresses and improve decision-making. So for today, we have two guest speakers. First one is Masaki Bessho, Head of FinTech Center of Bank of Japan. Masaki is the head of FinTech Center, Bank of Japan, having served as Associate Director, General of Payment and Settlement Systems Department, Deputy Chief Representative for Europe, and Head of Financial Infrastructure Studies Division. Masaki has represented Bank of Japan in several digital currency FinTech-related international forums, including the Group of Central Banks and the Bank for International Settlements, to explore CBDCs. He's received an LLM from the University of Virginia and an LLB from Kyoto University, and is also admitted to practice law in the state of New York. Dr. Stephen Hu is Head of Digital Assets, Trade and Working Capital at Standard Chartered Bank. Stephen is responsible for the strategy and roadmap of digital assets to support the real economy, driving initiatives across digital currencies, asset-backed tokenization, and venture building. Stephen is the co-chair of the Digital Currency Subcommittee for the Blockchain Association of Singapore, a professional council member at the Global FinTech Institute, and an advisory council member for Global Digital Finance. Stephen received his PhD from National University of Singapore, holds several FinTech and technology patents, and has published a number of journals, papers, and book chapters. Masaki, Stephen, thank you very much for being here with us today. So let's start. Just to keep the things clear, what we're going to do, as we do usually in this series of broadcasts, we're going to raise some questions. I'm going to try to direct the questions according to who is perhaps best suited for each one of these questions. And we'll have an organic conversation, and perhaps I will try to wrap up a little bit after you both have given your answer. First of all, is there anything that you would like to add before we start? Masaki, Stephen?
Yeah, nothing particular from my side.
I'm good. Very happy to be here. Thank you.
Okay, that's great. So first question, let's start with Stephen and then we go with Masaki. Can you give us a brief update of the CBDC project in your jurisdiction? That means Singapore and Japan, mainly the stage of development and the type of CBDC being considered, meaning retail, wholesale, direct, intermediate, so on and so forth?
Sure, I'm very happy to. So I'm Stephen, I'm in Singapore, so I will provide my experiences when I work on central bank digital currency in Singapore. So actually I started working on this thing in the project Ubin starting from 2016. So if you look at the development in Singapore, the central bank digital currency largely have investigate two main categories. So the first is around a wholesale central bank digital currency, that is Project Ubin. And second is really about retail CBDC, which is a lot of focus at the moment. So Project Ubin started in 2016-17. That time is actually leveraging a public-private partnership, and there's a number of commercial banks and technology partners being part of that. It's basically to collaboratively explore the use of blockchain and distributed ledger technologies for the clearing and the settlement of the payments and the securities. So through this project, MES and the financial industry players like us actually have understand the blockchain technology, explore the potential benefits, and also the applicability to the Singapore financial market infrastructure through some really practical experiments here. So Project Ubin actually has spanned over 5 consecutive phases. For those people who know, actually started from 2016 to 2020, right, has been officially concluded. And in fact, each of the phases have a set of prevailing challenges and concerns to be addressed by the industry. And the start of the project really explored the technology capabilities, focusing on the interoperability issue of the blockchain-based ecosystem and networks. And then later on have subsequently investigated the delivery of versus payment and payments versus a payment. So the last phase of project in 2020 is really shifting more from providing technical concept towards more payment value, the value proposition, including understand how much new models and how this new configuration of the money could improve the settlement efficiencies. And that is actually the wholesale part of that. So more recently, the attention have shifted more on the provision of CBDC to the larger public, that is in retail applications, right? So in 2021 November, actually the local regulator MES have published a paper. For those who came to know, it's called Economic Considerations of the CBDC in the Singapore context. So the landscape has been surveyed. One of the options available for MES is actually to issue retail CBDC in partnership with the private sector. So at this point of time, the view in Singapore is that a well-designed retail CBDC could have quite unique value propositions in the future digital economy. But however, there are neither strong reasons or for or against the issuance of a retail CBDC at the moment, right? And we know that in Singapore, there has been a variety of the payment instruments and infrastructure like a fast, SGQR, PayNow, that recently actually that already created efficient and pervasive electronic payment systems. But the stand is that if the need arises, but Singapore still wanted to be ready to issue. And there has been one project called Project Orchid in Singapore. It's also in partnership with the private sector that is more focusing on the technology, infrastructure, and competencies to support the issuance of the digital dollar, Singapore dollar, when the need arises. So I think that's briefly what is happening in Singapore from both wholesale and the retail context.
That's really interesting. Thank you, Stephen. We'll comment afterwards. Masaki.
Okay, thank you very much for a great opportunity to talk about our works on CBDC at DFNA CBDC Speak. At the BOJ, actually, we are interested in both wholesale and retail CBDCs. on wholesale CBDC, in 2016, we launched Project Stella, which is a joint project with the European Central Bank. We carry out experiments of building a large value payment system on DLT. We have published 4 reports, including those evaluating DVP settlement with securities, cross-currency settlement of multi-currencies, and privacy enhancement technologies. At this moment, we do not have any live wholesale CBDC project involving external partners, but we continue our internal research on wholesale CBDC. We focus on possible use cases and ecosystem, as well as underlying technologies, in particular DLTs. That said, it is true we're paying more attention to retail CBDC in recent days. In October 2020, we announced our approach to CBDC. We are yet to decide to issue CBDC. However, we think it's important to be prepared for possible changes in circumstances in the future. Considering the rapid development of technologies and the society, there is a possibility of a surge in demand for CBDC going forward. With such understanding in mind, we work on retail CBDC, both from technology and policy perspectives. On technologies of retail CBDC, we started our proof of concept in April 2021 last year. In the phase 1, we developed a small test environment on a public cloud, focusing on the core ledger of CBDC system and evaluated technical issues in processing basic transactions. The basic transactions tested include issuance to intermediary, delivery from intermediary to end user, transfer between end users, reception of CBDC from user to intermediary, and redemption at the central bank. The phase 1 was completed in March this year, and its results and findings were published in April. Immediately after the completion of phase 1, we stepped into the phase 2, where some additional functions are evaluated. The phase 2 is expected to last for 1 year until next March. Both the phase 1 and 2 are carried out within the BOJ without involving external parties, supported by a partner firm selected subject to a public tender process. After the phase 2, if we think it necessary, we'll consider possible field testing or a pilot program that will involve external parties. And on policy matters, we specified 4 focus areas. The first area is allocation of roles and responsibilities between the central bank and private intermediaries. In this respect, the design of retail CBDC we have in mind is a direct liability of the central bank to users, issued by the central bank, but distributed by private intermediaries and accessible through intermediaries. We think such a public-private partnership is essential to make CBDC ecosystem viable. Therefore, direct issuance model, where the central bank provides payment services directly to consumers, is out of our scope. In addition, synthetic CBDC, where private parties issue private means of payment, which is backed by central bank money, is different from the CBDC we are considering. Synthetic CBDC is not a direct central bank liability to consumers. And other policy areas we focus include implications for financial stability, privacy and AMCFT control, and cross-border implications. These issues need to be carefully considered involving stakeholders. We established the Liaison and Coordination Committee of CBDC in March last year and invited representatives from the industry and government authorities. Its interim report was published in this May. Thank you.
That's great, Masaki and Steven. Thank you very much. So I think from what I've heard that there was like an initial interest on wholesale, but there has started to be like more interest on the retail part. And that's something that I have felt when I've discussed or looked for information from Asia Pacific, that wholesale started to be like more interesting in that region that perhaps in the western side of the world, but now you're starting like to study a little bit more the retail part. Is that something that you would agree with? Yep. I mean, are we now thinking, I mean, in Asia Pacific, is the retail part right now becoming more interesting and more interesting as time goes by? That's what I meant. Is that something that you would agree with? I think so. So
yeah, actually think, at least at the BOJ, we have run on that track.
Good, that's good. So let's go to the second one. And we're going to have Masaki first and Steven second. What are the main motivations for considering a retail CBDC? And we're going to focus on this retail CBDC. Are there use cases for retail CBDC in your respective countries, and which are those? Masaki.
Okay, for this question, first, I would like to emphasize that introduction of CBDC is not a goal of itself. Our ultimate goal is pursuing further efficiency and safety of the payment and settlement system as a whole. With this guiding principle in mind, our announcement of October 2020 listed 3 possible roles of retail CBDC. First, CBDC could play a role to complement cash. In Japan, the amount understanding of banknote in circulation exceeds 20% of its nominal GDP, which stands out in the world. Cash is still functioning as an effective means of payment. At this moment, therefore, it is unlikely that the cash in circulation will drop significantly. However, if we look at a little bit longer time horizon, the story might be different. For example, the aging society and the population drain into urban areas place upward cost pressure on cash distribution network. It could potentially make access to cash difficult in some rural areas. If it becomes the case, it is not sure whether private digital monies can fully substitute for the functions of cash. Secondly, CBDC could enhance network externality of payments. In pursuing that, I think the keyword is interoperability. In Japan, in recent years, a number of private businesses, banks as well as non-banks, launched their retail payment services. They are fiercely competing to each other. Some of them adopt walled garden strategy, aiming to encroach customers and their platforms. However, in such fragmented retail payment market landscape, network externality of payment service is not fully functioning. For example, the scope of acceptable payment services is different from one retailer to another. Fund transfers across different non-bank payment platforms are not available. We expect that CBDC, which is highly interoperable with a range of private payment services, would be a basis for frictionless conversion among different private digital monies that could contribute to further efficiency in the market and also to better customer experiences. And finally, CBDC could promote innovation for the digital society. Use of CBDC payment data, subject to rigorous privacy control by users, of course, could bring new values, which would be a source of further economic growth and consumer benefits. Also, entrepreneurs are given opportunities to provide their innovative services on top of CBDC, which we expect to be a common public platform. It might mitigate the risks to market competition, which could be caused by the monopoly of data by a small number of tech companies. That's what I'd like to say. Thank you.
Thank you, Masaki. I would like to highlight just one small thing that I have that we have been repeating here. I mean, the speakers have been repeating here, and it's a key word for CBDCs to become like a bridge to get a level playing field and to get innovation into the field, which is interoperability. And that's one word that we have been discussing a lot in the latest CBDCs broadcast. And I think that that's one of the keys for CBDCs to become successful and to deliver what it's supposed to deliver. Stephen, thank you.
Yeah, thank you so much for that. I tend to agree with you what you said just now. And also, I think the motivations for issuing retail CBDC could differ slightly from one country to another, especially in the Asia Pacific region. Actually, different countries, they have a different characteristic of their society, and then the motivation could differ. But in generally, I think it's more of like three key motivations. That is, the first is to really to counter the rapid displacement of cash in the society. And also, I think second is really to foster efficient and more inclusive payment ecosystem. That also includes create more constantability in the payment business, where in some of the Asia countries has been dominated by several key technology players. I think third is really is to mitigate against the encroachment of a privately issued stablecoins or some foreign central bank digital currency if they are issued. If you look at from a Singapore context, actually the use of a physical cash is expected to stay here, right? So, and the payment inclusion benefits considered to be uncompelling because there's a very high level penetration in the banking and the e-payment services here. And at the same time, so external digital currency is a substitution actually remains to be a remote tail risk in my view. So the issuance of the retail CBDC will ultimately be a social economic rather than a monetary consideration. But if the CBDC is really being issued, I think the popularity or acceptance will be largely driven by the unique value proposition as the new form of the money as compared to the existing payment means today. I do see some new use cases, for example, in a smart nation context, the machine-to-machine payment, the Internet of Things, and some of the prepaid card, which have may potentially find retail CBDC very useful. I think that fulfill the gap that the traditional form of money cannot resolve now.
That's very interesting. I haven't heard that reasoning about the Internet of Things and machine-to-machine payments. That's really interesting thing because it's obviously one way for the things that we have at home and that we have are all around us to communicate. I mean, in an economic way, in a most efficient way. That's something which is very interesting. And I find also very interesting to hear that if CBDCs are retail CBDCs are coming our way, or at least in Asia Pacific region, it will be, and I'm going to quote you, more like a social and economic consideration, more than a monetary one. And I wonder if that has to do with something that you also said, Stephen, about trying to counter the displacement of cash and to avoid stable coins and foreign direct currencies. So it's like, I mean, there's obviously a social and a social consideration about preserving the money of each one of the countries, but the monetary consideration comes secondary, and that's something very interesting that I haven't like heard that clearly as I'm hearing it today, and that's really interesting to think to consider in the CBDC discussion. Thank you for this, Stephen. So let's go to the third question, and we're going to start this time with Stephen. The question is, what are the main expected outcomes of rolling out retail CBDCs, and what are the risks related to this rollout?
Yeah, thank you for this. I think the answer to this question, in my view, is also somehow connected to what we have discussed just now. The main expected outcome will actually depends on the objectives or the motivations of rolling retail CBDC, in my view. I would say the objective or motivation will differ from one country to another. There could be some commonality, but there will also be differences. So let's say if the objective is really to promote the contestability in the payment market or setting up the level playing field in the payment business. I think the expected outcome could be the business model innovation, lower entry into the payment business, and more optionality for the consumers. So let's say if the objective is targeted as the financial inclusion more, and then the outcome could be a reduced unbanked or underbanked population in the country, less shadow banking, or there's a new payment infrastructure or financial infrastructure. I think these will be the expected outcomes in my view. And at the same time, I think it was also a very key concern by many commercial bankers or central bankers and industry players. Is also about the risk or the challenges if rolling out this central bank digital currencies, right? So there's also depends a lot of discussion ongoing about what could be the impact, and if it is being rolled out, what's the cost and benefits of that. So what if recognizing the benefits, and there could be, a lot of factors to be considered. For example, what's the volume of the CBDC being rolled out, and if the volume is really small, I think potentially the impact to the macroeconomy could be limited. But if it's really substantial, and then ultimately there could be some studies required to see how the impact of the shifting deposit from the bank, to the central bank digital currency. I think there's a lot of discussions going on that. It's also, about the design choices question. I think probably we'll discuss later today.
Thank you, Stephen. Masaki.
Yeah, I agree with Stephen's point that the objective and design and outcomes are closely related. And in designing CBDC, we should carefully consider to achieve the policy goals. And related to the motivations I have just mentioned, in designing our CBDC, the keyword guiding our CBDC works is coexistence. We have two variants of coexistence in mind. First, we need vertical coexistence. Can I share my slides?
Yeah, sure.
Okay.
We're seeing them now. That's fine.
Can you see? Okay. On vertical coexistence, involvement of diverse players, for example, intermediaries, as a private firms, is critical for evolution of the CBDC ecosystem. As I mentioned, CBDC itself is expected to be a plain vanilla product with limited basic functions available for all users. On top of such plain vanilla CBDC, we would like to give diverse players opportunities to provide their innovative services, which each user can select and enjoy upon their preferences. With this concept in mind, we think it helpful to divide the CBDC system into two areas. The first area is infrastructure part. Oh, okay. Infrastructure part, where CBDC is provided equally to all users as a foundational payment instrument. And another area is overlay services part, where the private sector creates services that meet user needs. The infrastructure part consists of the central bank and intermediaries. Each intermediary is required to carry out its intermediary operations under certain rules as an entity responsible for distributing CBDC as a public goods. And on top of this basic use of CBDC, the private sector could provide various overlay services that reflect the needs of diverse users. In this area, private sector's innovation would bring benefits to the consumers and contribute to the overall efficiency of the payment system, thereby enhancing the sustainability of the CBDC system. And another variant of coexistence is horizontal coexistence. CBDC will coexist with cash, bank deposits, and other private digital monies. Compatibility of CBDC with other payment instruments is a precondition for horizontal coexistence. On the other hand, bank deposits, which is one form of such diverse monies, are in playing an important role in credit creation. Since CBDC does not have a credit creation function, CBDC should be carefully designed so as not to impair this function. And the phase 2 of our proof of concept, we evaluate technical issues to embed safeguards to control impact to the financial system. Such safeguards we will evaluate include, for example, caps for holding or transactions and remunerations, which are not favorable for end users. And finally, as Stephen mentioned, cost-benefit analysis is really important. And the internal report and of a liaison and coordination committee, we touched upon that point. Thank you.
That's really interesting, Masaki, to have like this horizontal and vertical coexistence is a really interesting concept that we have not seen before, but it's really interesting to try to find out in each one of the jurisdictions, which is like the position of each central bank or government about how this coexistence will take place or not. So this is really interesting, and I would like just to wrap up something that you both said, which is that obviously the expected outcomes and the risks will depend. I mean, they will be jurisdictional dependent. I mean, they will depend on which are the motivations and which are the aims of each one of the central banks. So this will be this is a question that is hard to answer in a general way, but each one of the jurisdictions have to study a lot about what are those expected outcomes and obviously the risks that are behind that. So thank you both for this. The next question is going first for Masaki, then for Stephen, and we have already talked about this a little bit before. So if we want to have like a brief answer because we already touched this point, that's fine. And the question is, should CBDC serve as a complement or a substitute for central bank physical currency, meaning cash? Are there any functions of cash that are elusive for CBDCs? Masaki.
Yeah, sure. First of all, if we are to issue CBDC, it is expected to complement cash, not replacing cash. And in order to CBDC to complement cash, I think some cash-like features would be needed. Such features include, for example, credit risk profile as a direct liability of the central bank, instant payment capability with finality, and easiness to use. Among others, I think universal access and resilience are important. To ensure universal access, it is desirable that CBDC can be used at any time, at anywhere, and by anyone. In this respect, offline payment capability in terms of network failures or electrical outage is desirable, particularly for Japan, given the frequent occurrence of natural disasters such as earthquakes or typhoons. In the scenario where cash no longer functions as an effective means of payment, offline function of CBDC will be important to ensure access to payments. At the same time, offline function, which requires local storage of value within user devices, has a number of technical challenges. For example, while tamper-resistant devices are effective to mitigate counterfeit risk, maintaining its security level against ever-developing security threats is a challenge. And also, we'll need technical and institutional arrangements to mitigate the risk of offline CBDC to be used for illicit finances. Therefore, even if we are to issue CBDC, it might be the case that we will not introduce offline payment from the outset, depending on the development around cash access in Japan. And another cash feature that is elusive for CBDC would be anonymity. While CBDC should no doubt be designed to ensure privacy and confidentiality, it does not mean that CBDC holdings and/or transactions should be fully anonymous. CBDC should not be misused for illicit finances, and certain arrangements for ensuring emergency safety controls are required to the extent necessary. That's my point. Thank you.
Thank you, Masaki. That's very interesting. Stephen.
Yeah, I think I will have a short answer for this question. In my view, it is more of a complement and substitution for central bank physical money. I think one reason is I think physical banknote is here to stay for at least for a shorter period of time that we can see in our life, right? I think secondly is there is indeed a unique differentiator of a CBDC as compared to the physical banknote, and that differentiator is really this programmability and the smart contract capabilities that can be embedded as part of the money itself. And we don't have that today, either from a commercial bank money or from the physical banknote. And this will certainly will provide consumers with more optionality and create new use cases for them. There could also potentially be demand arising from the uniqueness from the CBDCs.
That's a very interesting answer, and I would like to put something for the Q&A regarding this, which is like, is programmability limited to a CBDC, or could we design, or commercial banks could design programmability for commercial bank money? Because I see very simple examples of programmability already out there, like automatically paying your bills or things like that. For me, that's already programmability, but I understand that there are like more complex cases of programmability. If we have time, we can discuss this in Q&A. Thank you, Steve. That's very interesting. The next one is headed for Stephen, which has to do with his actual position. So it's Standard Chartered is a world-leading trade bank with a strong presence in major trade corridors. How would a CBDC impact global trade business? What are the key use cases here?
Okay, this is an excellent question in my view. Actually, if you look at central bank digital currency, there's a retail lens, there's a wholesale lens as well. But I believe the future development of the central bank digital currencies on the wholesale sense will really discuss through the lens of currency internationalization. If you look at the currency international today, actually they have three key dimensions. So as a payment currencies, as a trade settlement currency, and as a reserve currency. And now around the world, actually, we have a number of the key major currencies like US dollar, euro, Japanese yen, Chinese yuan considered, and they all need to go through these different stages of development. So at this moment, if you look at the landscape of CBDC development, it is most of the developments are centered around the payment currency. So that is in the payment applications on the transactional basis. But we can see if that is continue, and in the future that could potentially be spilling over to new use cases in the trade settlement. And if that being happens, and then the implication can be more profound once it is being used not only in the payment but also in the trade financing. That means how to support the real economy, import, export, financing those transactions natively using the central bank digital currency in a digital format. And I think that also have profound implications to a lot of digital business model we have today. For example, those third-party trade finance platforms out there, and even for the commercial banks, the revenue models could be slightly different if we really reach that stage. And I think that's what in order to make that really happen, the solid foundation of the payment-based CBDC has to be there, and the close public-private partnership and the regulator engagement and the participation from the key industry players will be instrumental.
That's really interesting. In fact, this morning I read something, a very similar comment coming from someone who posts a lot about the yuan. I mean the CBDC from China, and I was trying to find his words just to complement and to see whether your opinion about this, but I couldn't find it that fast, not to lose time. But the thing is that at the end, this is it. Using a digital renminbi or an yuan will give you access to a digital customs clearance and digital logistics system. That's rather related to what you're saying. I mean, if countries are able to develop and to roll out a wholesale CBDC that works for trade finance, this will allow to make customs, digital, all logistics easier. And I think that that will be the most probable outcome of this kind of wholesale trade cross-border CBDC, right?
Indeed, I think I agree with you. I think that's going to be find a lot of applications in the import-export space, and that's also help the more data-driven kind of solutions out there. And besides that, if you look at some of the use cases in the trade, for example, in the factoring business, there are indeed circumstances that the buyer to factorers payments need to go to the sellers, which is not ideal, but it is in a lot of time it's being limited by the policy and the procedures, by the commercial terms. But that introduces actually unnecessary counterparty risk in the whole transaction. But in the commercial bank money or the existing payment system, we could not address that. There is no such feature. And you can also imagine the future where you're going to have a deep tier financing where you got the anchor buyer, you have a multi-tiers of the financing suppliers. If the CBDC really designed the token format, is there a future that this token money can be passed down from one layer to another layer of the supplier, whether that token can be introduce new feature of financing to support the real economy? I think that's all the interesting ideas that we can actually explore as part of the CBDC conversations.
That's great. Thank you, Stephen. The next one, it goes to Masaki. Can you tell us more about Bank of Japan's CBDC ledger design alternatives?
All right, sure. I'm going to use my slides again. I'm afraid it might be a bit too complicated. Okay. And the proof of concept is one, we posit three design alternatives for CBDC ledgers. In all of these three alternatives, ledgers are centrally managed, not relying on DLT. These alternatives have different setups in terms of data format and the entity responsible for recording users' CBDC holdings. Design one in the left is account-based. CBDC holdings are recorded as account balances. Balances of all users are recorded on the central bank ledger. Design 2 also relies on account-based data format. However, balances are recorded on the intermediaries' ledgers, although CBDC continues to be a direct liability of the central bank. The central bank ledger records each intermediary's aggregated balances of its customers, whose CBDC balances are recorded on the ledger of that intermediary. In Design 3, users' CBDC holdings are recorded on the central bank ledger, same as in Design 1, but its data format is token-based. CBDC holdings are recorded as a list of identifiable data or tokens, each of which represents a specific denomination. CBDC transfer is completed by updating the link between the token and the user. Our evaluation is based on the assumption that in a production-ready system, processing performance is need to be on the order of tens of thousands of transactions per second and hundreds of thousands or more at peak with latency of within a few seconds. The results showed that performance was lower in Design 2 compared with Design 1 due to the effects of traffic jam on the central bank ledger. When there are multiple requests to update the balances of a specific entity, they cannot be processed simultaneously because the balance is a single data. A later transaction cannot be processed until the earlier transaction is completed. In Design 2, because we assumed that for a transfer across intermediaries, updates on the central bank ledger and corresponding intermediary ledgers are processed simultaneously and conditionally for each transfer. Because of that, significant traffic jams on the central bank ledger was observed. And Design 3 requires more resources than other alternatives to process the same transaction. There are two main reasons. The first is for each transaction request, updates of user records are required for multiple tokens. And secondly, token exchanges between the user and intermediary, which is required when the user does not have a set of tokens that matches the transaction value, happen for a constant fraction. However, it should be noted that traffic jam to a specific user balance could also occur for design 1 and the live system, because it is also account-based. In order to build a production-ready system, some strategies, for example, splitting the account balance record of a specific entity into multiple parts, or redesign of the business process to relax the simultaneity requirement of processing between the central bank ledger and intermediary ledgers might need to be considered. And also resource deficiency, which was significant for design 3 in the test environment, would also arise in other design alternative in the live system. Scaling up or scaling out would be needed. And given these findings, at this moment, we have not made any decision about what sort of ledger design we might adopt. We'll continue our exploration in more depth, including alternatives we did not test in the phase 1. In this respect, we are much interested in the implications drawn from experiments of other central banks and private parties, and therefore we are open to discuss with others. That's my point. Thank you.
Thank you, Masaki. Here I'm going to make the question that I always try to make when someone is talking about the ledgers. Is this DLT or centralized?
Yeah, in the experiment, we did not rely on DLT. Of course, we are neutral to technologies, and if DLT is fit for our purposes, we do not hesitate to use it. But when we planned this proof of concept, we had a number of discussions on the possible platforms for the test environment. And because some arguments arise that also it is doable to produce a CBDC system relying on DLT, scaling and performance of DLT is challenging for retail CBDC system, and to overcome such characteristics, complexity will be introduced in the CBDC system. Therefore, because the goal of our proof of concept was to study implications for the large-scale live CBDC system, so we selected the simpler approach relying on conventional database.
Thank you, Masaki. That's something that I always wonder when we're talking about the ledger. So I thank you for your straightforward answer. We're running out of time, and I still have 2 questions that I would like you to answer in a very fast way. And I'm sorry to ask for this, but it's just to give the public the opportunity to raise their questions. So the first one is, how would you balance the delicate trade-off between privacy of transactions and compliance? Compliance meaning obviously not your client and AML considerations. Stephen, let's go first.
Sure. I think it's important that the CBDC system can preserve the user privacy while ensuring the adherence to the regulatory and the financial crime compliance requirement. I think this will just mitigate the risk of the money laundering, tax evasion, and so on and so forth, right? But I think if I want to address this question, I want to emphasize the role of technology that potentially can play to help us to reach that trade-off, right? At this moment, there are some new technology out there. For example, the Intel's software got extensions. It's called Intel SGS. That could be the options to address the privacy requirements of central bank digital currencies, where they use a private area of execution called enclave, and it can encrypt the entire ledger when it is installed, right? There's also some other new possibilities out there based on the complex cryptographic algorithm, for example, zero knowledge proof, and so on and so forth. So it can ensure the compliance without revealing the identities. So, although there's a different stages of technology development, I think in order to reach that trade-off balances, I think what's important for us is to think out of box as well, to leverage new technology as much as possible.
Thank you, Stephen. Masaki.
Yeah, privacy is one of the fundamental rights of human beings. In addition, privacy should be protected to achieve its sufficient adoption. If CBDC is designed in a way that triggers the general public's concern on the privacy and state surveillance, we can't expect it to achieve its policy goals. On the other hand, CBDC should not be misused for illicit finances. Therefore, we should strike a right balance. On privacy, in considering that, I think adherence to the principle 3 of the G7's public policy principles for CBDC, published in last October, is really critical. The principle 3 includes elements such as purpose limitation, access limitation, data minimization, and user control. In the internal report about CBDC Liaison and Coordination Committee, we touched upon this principle, and incorporating the elements in the CBDC design are very important. And in tandem with such policy discussions, we're studying on technologies that could enhance privacy. The technologies could include anonymization and pseudonymization, secure computation, federated learning, and as Stephen mentioned, zero knowledge proof, and self-sovereign identity. While some of these novel technologies are premature so as to deploy in the live CBDC system today, I think forward-looking research will be important. Thank you.
Thank you, Masaki. That was very interesting to see that you consider that technology could solve this at some extent, and that's really interesting. I'm going to drop my last question because we run a little bit late, and I'm going to pass to those questions which have to do with the public, and I'm going to try to condense them a little bit. I know that, for instance, in this one, I'm going to mix two different things, but I think you will get the point for the two person from the public we're going. So the question is, what about an SGD stablecoin? And some others said, do you see a place for wholesale private digital currencies such as Finality in this coming market? So these two questions have to do with what is like the place, or what is the space of private digital currencies such as stablecoins or some other wholesale private digital currencies along a wholesale CBDC? Is there going to be competition? Is complementary? What do you think?
Sure, Carlos. Maybe I can pick out this question.
Sure,
since
Steven.
it's Singapore dollar. I think we are in a phase that consumers expect more optionality in the way that they pay, and also they are expecting ever increasing new experiences from their financial partners or financial institutions out there. So at this moment, you will see quite a number of new initiatives out there. In Singapore, Project Ubin has developed into a Patio, a Temasek-led consortium, and you can see Finality. There's a couple of others, including the stablecoin issuance out there. So I think at this moment, we are still at early phases of development of the private issued stablecoin out there. And at the same time, we could see the most utility of the stablecoins out there are still limited to the appropriate purchase of cryptocurrencies, and the amount of stablecoins being used in the daily transaction still cannot be compared as to commercial bank money, as well as the physical banknote that is issued by the central bank. So I think we will continue seeing the further developments, and ultimately the user adoption will decide what the future will look like. And all these new issued private coins, either wholesale or retail, has to solve a unique problem that the current payment infrastructure or payment methodologies cannot solve for. I think that will really tell us how the future will look like.
Thank you, Stephen. Masaki, do you have something about this?
Yeah, in Japan, last month, a bill which allows issuing a stablecoin in Japan passed the parliament. And some businesses are working on to launch a stablecoin in Japanese market. And under the newly introduced regulation, such private stablecoins should be either issued by banks or licensed payment service providers or trust companies. And this implies that from the consumer protection perspective, stablecoin should have a sufficient soundness in terms of its credit or fully backed by safe assets. And I think this approach is almost in line with the approaches of other major jurisdictions. And the implication is that if stablecoin is issued, it should be safely backed by other assets or entities. And the challenge stablecoin would face would be given that stablecoin should be safely designed, how they can make the opportunities to make money with the stablecoin issuance. At this moment, I don't have a clear answer. And in this respect, Jerry, I have some expectation for the stablecoins because such stablecoin issuers as private businesses could be more innovative and creative in providing new services or new user experiences. Therefore, I look forward to the development, but at this moment, I don't have no clear answer on this point. Thank you.
Thank you, Masaki. I'm going to the next one, which is the fact that China is rolling out an e-yuan rather quick a motivation to fast track the rollout of CBDCs across Asia-Pacific countries? Who wants to go first?
I'll take that question. Yeah, for most central banks, their CBDC works are primarily driven by motivations to address domestic pain points in their retail payment landscape. The pain points could be immediate or possible challenges in the future. And because such domestic pain points are different from one jurisdiction to another, I don't think there is a single answer for the moment when CBDC should be introduced in that jurisdiction. For jurisdictions where financial inclusion is an immediate challenge and private-led solutions are not expected to be available, as is observed in some emerging countries, CBDC could be an immediate solution to address such issues. Also, for example, as China, if a monopoly or oligopoly of retail payment services and associated data is being formed, ensuring competition and privacy would be an immediate challenge. That being said, given the current developments at home and abroad, it is also true that there is a reasonable possibility for CBDC to become global standards. We must acknowledge the fact that the CBDC is becoming one realistic option in many jurisdictions. And if CBDC prevails in other jurisdictions, issues may arise as to whether provision of financial services in Japan may be adversely affected, or in addition, whether interoperability or the foreign CBDCs can be ensured without issuing our own CBDC might also be an issue. So in short, the introduction of CBDC is a national decision driven by domestic perspective, but we should be vigilant to the development of other jurisdictions.
Thank you, Masaki. Stephen.
Yeah, I do agree with Masaki. I think it's every country is different and has their own characteristics and challenges, and they also have their different motivations in order to issue. So personally, I do not think that e-yuan or e-CNY or any issuance by a neighboring country's decision alone will just motivate to fast track a CBDC in another country. And the decision really should have to be taken based on the circumstances and the characteristics of the domestic country, and taking into account their own objective in rolling out such new payment methods out there. However, I do see that there are more and more international collaboration in this space. that includes collaboration among the central banks in Asia. Around Hong Kong, you see that the Bank of International Settlement have taken the lead. And then you see there's a number of central banks, coming together, try to, address the interoperability issue of central bank digital currency, in which actually the Chinese central bank, PBOC, has been part of as well. So these are all good development in this space. I think, and then these are once we have really come together from both on the G2G level as well as the public-private partnership model, I think that will really fast track a CBDC issuance rather than just based on a decision made by another country.
Thank you, Steven. Thank you, Masaki. I had to leave several questions about interoperability, disintermediation, and performance of design 2 and 3. I'm sorry for this, but we have run out of time. So thank you for being here with us. This is the end of the number 7 session of the CBDC broadcast. Coming up in August, we'll have the CBDC broadcast number 8 with Oliver Wyman and AWS. We're going to have FMI broadcast number 4 with Ripple and Finality, and we're going to have also FNA Subtech Technology Showcase. Please remind that you can schedule a demo of FNA CBDC Simulator in our website or with the link that you'll have in this presentation. So finally, I would like to thank you both, Masaki and Steven, for such an interesting and illustrative and organic chat. This has been very, very interesting, and I really thank you for being here with us today. Have a nice day, both of you, and all the attendants have a nice day as well.
Thank you so much.
Thank you so much.